everyone. I made this video just to discuss how I have been killing synthetics, just to discuss how synthetics are traded according to my strategy, what I use, etc, etc. And in doing so, I'm just going to do a market breakdown for the day. So as you can see, we are on derivative trading view. To get this chart, just search derivative trading view and you can open up whatever you want to open under the derived parts. You can have your forex, your normal pairs, but obviously we're trading derived, we're trading synthetics, if you may say. So there's volatility 10, 1s, 10, 25s, 25, 50s, 50, 75s, 75. I trade 75 and 75s. I haven't delved into other things yet. As of now, I just want to focus on one thing, master it, and then move into the others. So first things first, what do? We just easily just look for what support and resistance levels. So we use our horizontal line over there just to mark out our levels, and I'm going to highlight as to why those certain points are actually support and resistance. And what we need to understand is that support is basically the roof. It's a place in which, support is basically the floor. It is a place in which the market does not want to go. It is a place in which the market does not want to dip under. It keeps tapping that point and buying, tapping that point and buying. And resistance is the roof. It's at a point where the market doesn't want to break out of, doesn't want to break through the top. So support is bottom, resistance is top. Support, surface, resistance, roof. Simple. Okay, so we get our support and resistance levels marked out. So now, as we can see, the support and resistance levels are not going to be looking as good going all the way down. So what we can do for now is just mark out the lowest point over here, right? Yes, there is the lowest point. That could be our overall target if this continues to sell. But don't worry, even if we do not have good support and resistance levels, the most powerful thing in trading synthetics is your price action patterns, your continuation patterns, your consolidation and breakouts. Breakout strategy is what is key. It is what cooks in these charts. So now you've marked out your support and resistance, you can start marking out your trend now. And as you can see, there's a young trend over there, and right over there. It's not the best looking trend. Okay, let's see if I can pull it from here. No, it doesn't look nice. I don't like that one. I like this one better. So this is our trend. So once we've marked out our trend, we understand that we're in a downtrend. We're overall looking to continue going down, right? Okay, so let's jump into the 4-hour time frame now. I'll use 1 day, 4 hour, 1 hour, 30 minutes, 15 minutes is my entry, 5 minutes and 1 minute is where I just confirm the direction. When I want to add orders, I'm going to update you on that. So okay, cool. So then you start to notice that, oh damn, we can actually even have more support and resistance levels, right? Just to solidify and have better entry criteria, if I may say. So cool, those are our support and resistance levels, and this is our overall trend. So now inside the trend, we can look for another trend. We call that trends and trends, or we can look for price action pattern. And if you look over here, we have a double top right there, hence why we sold from this point all the way down. So right now we don't really have any entry criterias or good entry points, so we'll jump into the lower time frame to look for entry points within this current market, which direction we would be looking to be going. So you see, oh okay, we have been going down, very bearish. So what made me to even enter the sell to begin with? Look over here, this was my reason for the sell. We had a bearish flag right over there. This bearish flag indicated my first entry, or one of the days I was trading. I'm sure you guys be watching my TikTok videos of my learning how to trade synthetics series, but yeah, we took an entry down here, it pushed down, we took more entries down over here. Once we broke, it gave us this correction as well, and then we were out over here. We were out over here that day. Then it gave us this long correction over here, and then from there it gave us a breakout, took entries over there, and it kept going down, and the rest is history. So okay, we don't really have that much to talk about in this point. Can just highlight this point over here as a zone of supports, of resistance. Okay, there's a key rule: support once broken becomes resistance, resistance once broken becomes support. Why did I just mention that? We broke out, retested, there's a touch, third touch, entry, all the way down. Support and resistance, baby. Support and resistance. Same thing here. We broke out, we retested, and we went all the way down. First touch, second touch, third touch, fourth touch, boom. It is literally that simple. So over here as well, first touch, second touch, yes, it's just second touch, but remember, we marked up this point over here on the higher time frame as a strong zone and as a strong level. So we came in, boom, all the way down. So what am I expecting now? Since we already took some momentum to the upside, I'm expecting markets to come up into this point over here and start selling down. Why? Because that's the most logical place the market could turn. And if it decides to give us some sort of continuation pattern at the top over there, it consolidates, gives us a continuation patterns, and actually breaks out to the top, then we would be buying. But right now, let's look for extra confirmation that we are going to continue the buy into itself. Right, as you can see, if we zoom in over here, we had impulse correction. We corrected over here quite a bit, and we had somewhat of a reversal pattern right there. And once we broke out of the reversal pattern, remember what I talked about, it loves patterns. Once it broke out of this descending wedge, that reversal pattern, it gave us now an entry over here. It gave us an entry of a breakout retest, and then boom, push to the upside. So our target is up here. So we would be, since we've already missed the entry, or you guys have missed the entry since you're watching this late, if this gives us a good correction, it plays out something like this. And then boom, that's what we'll be looking for. We're looking for a good correction, and then once it breaks out, we enter. Or if it breaks down, that's your sell. If it breaks up, that's your buy. Like, it's that simple, really. Like, it is that simple. There is no news that are going to affect your trading. There is no unnecessary spikes, manipulation, all of that. The price, let me rephrase, the synthetic indexes are just smooth. Pure price action is just beautiful when it comes to trading synthetics. So that's basically how I have been killing synthetics. Maybe we can break down volatility 75 and hopefully you understand a bit better. I don't think my explanation done duty here, but let me just give you one more look at what type of entries we're looking for. Okay, we have pushed up, we missed that initial push up, it's fine. Then we have somewhat of a correction. So if we had this type of correction, what do we call this? We call this a bullish flag. We'd wait for a breakout, and then our entries would start to play out over here at that breakout. And then if it does retest, we'll go in a slight drawdown. Yes, you can start full margining your entries. Okay, let me rather say full margin. You can start taking more entries so that you can capitalize even more. But what sometimes happens is that we have a clean breakout and then we continue to push in the upside. Hence why I said enter at the breakout. You don't need to wait for a correction. The correction makes it so that you are you have better confirmation, yes, but you don't need to wait for correction. But we're looking for those type of entries: impulse, correction, impulse. 1, 2, 3. 3 is our entry. 3 is our where we take our trades. And then now once it gains momentum, you start to notice that the momentum starts slowing down, and that's where you would look to take out your trades, because sometimes it can reverse all the way to your setup entry and then continue to push up or even break that whole thing. So once it starts slowing down in momentum, you start to look to exits. Very simple. I hope that made a lot of sense to you guys. I hope that you can use some of this knowledge to go and kill synthetics. So I just want to quickly go and break down volatility 75 index, and then we call it a day. Right, volatility 75 index has been buying. I missed that buy. I was supposed to close an easy $60 over here, but it's okay. It's okay. It is okay. Cool. So remember what I was talking about. We had that impulse. Now we had that big correction. Look what happened here. Look at that big correction. Instead of actually going down, what happened? We broke out. At that breakout right here is where we look to take entries. Or we broke out here, and then yes, we reversed into it to have minor losses. But because we broke that high, we can say yes, we are going to continue to buy. That is a change of market character. You get me? Some concepts of SMC you can still use 100%. Hence why this, even if we had that small pullback, because we had that charge, we can say we are more likely to buy. So we wait for the breakout, we take entry, and once we take entry, you've noticed that momentum starts to increase. Momentum will start to increase. Around here, momentum will be at its peak. Around here, the momentum will start to slow down. Once it starts slowing down, we exit, but it's fine. Let's jump into the higher time frame and analyze properly. Jump into the 24-hour time frame, and then on the 24-hour, we notice that okay, we had a downtrend that has been broken, hence why we have been so bullish. Right? Boom. We just tapped over here. We're expecting a lot of bullish momentum all the way up here. So if you want to take swing trades, look for entries and get in and hold till flipping December if you want to. But personally, I like to day trade. I like in and out throughout the day. Take like three trades in a single day, plus minus. Okay, there we have our downtrend. Now we can mark out our support and resistance. You'll notice that we don't have a lot of support and resistance on volatility 75 as of yet, so we can just mark down this as a low, jump into the lower time frame, and you will start to notice support and resistance levels that actually make sense. Or remember when I was talking about the breakouts? Look at that. We broke out, tapped over here, boom, look where we at. Look where we at. Breakouts are beautiful when it comes to synthetics, or specifically volatility. Breakouts are the way, my brother. Breakouts cook. Okay, can we mark this as a level? Nah. Okay, those are our levels, and this would be our targets. Let's jump into the 1 hour time frame. Okay, on the 1 hour time frame, we see that we have been going bullish, we have been going up. And remember what I said about breakouts? Remember the entry criteria we were looking for? What do we call this? A bullish flag. Bullish flag occurred, breakout, retest, boom. Simple. over here we didn't have quite a flag, but the reason this one even held is because it is on a resistance, it's on a whatchamacallit, it's on a support. Sorry, the resistance once broken becomes a support. It is on a support. We can highlight this and our entry would be here, and we push up from there, and target is up here, right? Very simple. And we see that, oh, we had a double top over here, so we can highlight that double top as a potential resistance. So we'd either take partials up here and close a few trades, or we protect our entries already as it flies into profits. So what am I looking to do with the specific charts, the specific pair? What would I personally be looking to do? So since we're already going into profits, once we get here, I would need to see whether or not we are going to consolidate and break to the downside, or consolidate and break to the upside. Once we break to the upside, enter over here at the top above it is my entries, or if it gives us a breakout retest is my entries, and boom, that's what I'm expecting for volatility 75 will be over here. Simple setups, plain and simple setups. 15-minute time frame. Maybe we can catch something now. Maybe we can even catch something now. Okay, we missed our catch. We missed the catch that I'm talking about. If you look here, we had something right there. Okay, let's jump into the 5-minute. Yeah, we had something here to enter. Actually, I have a catch actually still. So if we can come back into this point over here, around here or around here, I can take buys and push to the upside. So let me highlight a point of sensitivity that I would most likely enter at. I'd most likely enter here. And my entry point would be here. SL even below this low. First TP here, second TP, overall high. Okay, not overall high, but like, you get what I'm trying to say. So that, my friend, is volatility 75. I'm sorry this video was boring. I'm sorry I was talking so soft. I'm sorry for a lot of things, but I hope you understood what I'm trying to share to you. I hope you got the message, the detail, and I hope you can go and kill synthetics the way I have been for quite a bit of time. And remember, synthetic signals are coming soon, and we'll be dropping it with me, myself, Bands, and Boro are going to be pushing synthetics soon. So yeah.